Hey guys, how's it going? Good afternoon. Hey, Yugon. We've actually been watching for this for a little while. I've been watching the spy on the 15-minute trading in this bull flag, and we failed 3 touches at the top of the flag. So I was kind of expecting this move to the downside here towards the end of the day. We'd been talking about it in the trading floor a little bit, to be on the watch for a rug pull. Hey, I'm just gonna call you Anna because I'm not sure how to say the rest of the name, but appreciate that. Music and audio is off. What? That's not good. Oh, okay. I was getting a warning from YouTube saying that my audio bit rate was low, but I know that that's set correctly, so I'm not sure what else would be up. Okay. Cool, cool, cool. So how's everybody doing this afternoon? We've been in a waiting pattern ever since we had this big rip to the upside. Got into some U Pro here at the bottom and waited for this move, and I got out right as soon as I saw this wick off the top. Um, the reason why is we saw this move past the 5 minute 200 period moving average. So this is what I was waiting on, was for the SPY to make a decision of whether to float around the 200 period moving average on the 5 minute. And as soon as it rejected off of the top of this channel for the third time, we had our first touch, right? And then we had the second touch, and then the third touch, and then we had a big engulfing red candle that closed below this entire V-shaped recovery move. So after we closed below the 50 period moving average, I kind of read this as a rejection. So I am already in some SPXU for the end of the month, and that's kind of how I'm playing this right now. But I was scalping some U Pro here, and I got out of that position at the top of the flag, and I was just waiting to see what would happen to decide if I would get some more U Pro for another rally. But there were just so many things stacked up against the SPY. It has been trading in a channel, for example. Like we started this channel right here, touch, touch, and a run down, big gap down, running along the bottom, and then another touch, and now we've rejected. So I was just kind of
I'm
waiting to see
gonna
what would happen.
interrupt you for just a moment here, TD. Your screen isn't sharing.
Oh, is it? Oh, oh, oh. That's embarrassing. That is embarrassing.
I wasn't even paying attention. I clicked over to YouTube and I saw the
That's
YouTube
funny.
chat going, "We can't see our
Long.
screen."
Oh God. Everybody's freaking out. What are you doing, TD? Okay, there we go. I'm sorry. This was the channel that I was talking about. You didn't miss a whole lot. Yeah, I'm sorry. I got a little bit of tunnel vision just reading the chart, and I didn't look over the chat. I'm sorry, guys. I do I do try to read the chat. I just feel really dumb because I'm like I get tunnel vision a lot. My chart's on a great big screen, and I got chat over way off to my left. I have to break my neck to go and look at it. Sorry about that.
We do watch chat though, Rick. We do.
we do watch chat, and the mods are always here watching chat, even when I'm not, if I'm like going on a tirade or something. So again, I'm sorry. Anyway, so the this little run that we had was a nice little relief rally, but honestly, like kind of a weak move. What I was noticing was that on this rip, we had some drop in volume the entire time, like the whole volume chain, or the chain of volume bars here on the 15-minute, the 10-minute, all dropping consistently as we were ripping to the upside and throughout the consolidation. So I knew that as soon as we got a really big pop of volume, that we were going to see the SPY make a decision, and that it was likely going to be to the downside. Just because when you see volume moving down and the price moving up, that's a bearish indicator. And you can see it here on the 5-minute too. It's not as clear as when you look at it on the 15-minute, but you can see the volume dropping as the price was going up. So, and this one big candle that broke through the bottom of the 100 period moving average, that's a good signal for an entry for a short position. And it's still good. Like, it's still an early entry. We're just testing the middle of this channel now. We're probably going to see the SPY chop around on its way back down to the bottom of the channel again, but the big move is going to come with CPI. Let's see what the PPO indicator does. This is showing huge momentum to the downside right now on the 5-minute chart. The 15 minutes probably crossed down already. Yep, we had a cross down. So cut right through the moving average on the not the MACD, but the RSI. All solid indicators of bearish momentum taking over here. And it's not a coincidence that it came right as Power Hour was getting started. Okay. So, CPI Index. We got to check what the Fed is expecting. And if you go to the economic calendar, I'll go ahead and pull one up here on another screen here. Just a second. Give me a few seconds here. So if you go to tradingeconomics.com, gotta switch. There we go. So tradingeconomics.com, this is the calendar that I like to use because it shows the previous values, consensus, and forecast for future prints on basically everything. Like it's showing international information, which is awesome. This is an excellent calendar tool. So if you are looking for big macro data, anything significant, even down to like individual Fed speakers and when they're going to be speaking, it doesn't always provide the link, but it at least lets you know who's speaking and when. That is critical information, super useful. So one of the things that is going to be hitting the market tomorrow is we're going to get the updated 30-year mortgage rate. This happens every Wednesday and Monday, Wednesday, and Thursday. We get a 30-year mortgage rate update. Let's see. We've got Bank of England Representative Pill speaking, so that's going to affect the English markets. We got PPI coming out at right before the closing bell for month-over-month core PPI. That's going to be a significant production inflation indicator. So this is probably going to lead our expectations for inflation for the CPI as well as PCE later on this month. And we do have a few Fed speakers that are going to be coming out in the evening. Keep in mind that all these times that you're seeing are in my time zone. I'm in Pacific time zone. So just bear that in mind when you're reading these, that this is actually 3:30 Eastern instead of 12:30. We have the FOMC minutes coming out at 9 p.m. 10-year note auction. Hold on. What is my time zone showing? Do I have my VPN turned on? Because these times are not making any sense. Ugh, I'm in UTC time. I should be UTC -7. That's why this is all screwed up. I was like, what the hell? Like, that? Why would they be speaking at 6 in the evening? That makes no sense. So, my bad. Okay, yeah, we got the FOMC minutes coming out at 11 a.m. Pacific time, so that'll be at 2 p.m. Eastern. The 10-year note auction is happening an hour before that. PPI comes out an hour before the market. That's more like it. Okay, now that makes sense to me. Sorry about the confusion there. And then Thursday, the really big data that we're looking for is the CPI, core inflation, and the year-over-year inflation data, as well as initial jobless claims coming out all at the same time. So if initial jobless claims come in low, which they have historically done so, we're showing low job loss, very few jobless claims, and inflation has been running hot continuously. And worse than that, we've got inflation expectations coming in extremely high. So this is the Fed's expectation, 6.5%, which is higher than the forecast and a little bit higher than previous. This is the what they call headline inflation. And then we have the CPI inflation rate coming in at 8.1 is what they're expecting. So this is a less significant number from core inflation, according to the Fed. And keep in mind that the Fed pays more attention to PCE according to their own statements. But this is still significant because the market will trade on it. And if you see CPI coming in hotter than the forecast, this is the forecast. So if you see 6.5 or higher, then the market will probably react very poorly to it. If it's hotter than the Fed's expectation, then expect the market to throw an absolute fit. And what we've seen is that before the market gets that data, is we tend to see a run, and this was part of it. And I'm kind of expecting for this to bounce around here and try to break this channel or juke a few people out, maybe put in a lower low at some point on this chart. If we break out to 165 before the inflation numbers come out, then you should probably expect the market to be wrong. Every single time that we've had a market run ahead of CPI, there was a huge reversal that hit the market. CPI numbers came out right here. The market went on a run the entire week leading into CPI in early September, and then we hit a top and the market dumped as soon as the CPI numbers came out. We had another one in August. This was when CPI numbers came out, and then we dumped after that. So, when was the last one? Yeah, right here in July, we had a quick run that happened ahead of the CPI index, and then it dumped the following week. And once again in June, this was the worst one. We had CPI numbers come out on Friday in June 10th. It was right here. The market had gone on a run an entire week in advance. So we had seen this whole move happen 2 weeks before the CPI numbers came out, and it printed so hot the market dumped and gave up. What was this entire move after all? Six days and it dropped 12% on the entire SPY. So market did not have a good time. Every single time we have seen the market lead the CPI and front run the trade, it's been wrong. So right now we are printing a new low. I may get out of my short positions temporarily with the expectation that we put in a higher low. If we do end up getting a higher low and we see another bullish divergence on the RSI at any point, then I'll probably exit my short position for now, or at least dial it back a bit, because I'm pretty heavy in my short positions. Don't want to over leverage myself in any way, and the market really does like to try to front run CPI for some reason. Right now, like overall, the market has been really choppy. It's not made very many decisions this week. Okay. Let's go catch up with Discord chat. Got a lot of requests for... Let's see. Okay. Okay, if you guys have any questions for me, I see some questions that were left over from the last stream. But if you guys want any other questions answered, you can drop them in live stream questions. I'll see those. Congratulations to Savvy Trading for that big play on SPXU. 33% gains today intraday. Very nice. Yeah, if you guys have not seen my tutorial video on trading the SPY on a budget, trading with leverage with SPXU and UPRO, I highly recommend it, especially if you're trading with a small portfolio and you've been watching me for a while and you've seen all of the trades that we do on SPY. You can trade the SPY consistently well, and it can still be cheap. Just one question: where's the bottom of the market, dude? I don't know, man. This market's far from its bottom. I've been looking for the bottom for a while. I don't think we're there yet. If I go all the way out to the daily, you can see this giant megaphone pattern, and it's not on my chart right now, but back in 2008, it had a very similar megaphone pattern. And the last thing that the market did before it completely dumped was it did this like last little attempt to touch the top of its megaphone, and then it dropped all the way down up until the following year, from October until March in 2008 to 2009. The market just went straight down, and it gave up like 25-30% of the market's value in the span of 6 months, which that was a very short time for the market at the time. Our market right now is far more liquid and trades a lot faster than the markets did back in 2008. And I chalk that up to greater retail participation and higher density of algorithmic and computerized trading. But right now, the market is just it's starting to show signs that it is finding a new bottom for the latest move. I was anticipating a touch of like 340 or something, at the lowest. I was kind of anticipating the market would put in a new low here and then put in a higher low and then go on for like a little bit of a weak rally and try to retest 380. That's kind of my anticipation for the holiday rally. And then following that, going into January, my thoughts are that that is the point. At some time in this range between January and April is when we will see the real crash, the big capitulation. That's my best guess for it. If you're asking what my thoughts are on the bottom for this year, I'm thinking 340, maybe 320. But 340 seems like a much more achievable target. But we might start reversing here in the next week or two, especially if we get a really low CPI print and we beat expectations. That would be, that would be just as well. But for right now, I'm looking for the market to put in a new low somewhere around 340 before the end of October, and then we'll start our holiday rally for November, December. Hey guys, I'm glad to be as helpful as I can. Let me see what else. What are you guys looking up? First move is always wrong. Yeah, I don't know if it's always wrong. Sometimes it's just too early. Thoughts on MMAT and MMTLP? Um, Metamaterials. I haven't looked at that in so long. I'll take a look at it though. Why not? Let's see. Poof. That's painful, man. Um. So the last time it had a big move was post earnings after it had printed a slight surprise in its earnings expectations. So um, it dropped a 6 cent loss per share, and the expectation was a 2 cent loss. The last one was a 7 cent loss. They had a big revenue surprise. They're posting consistent revenue surprises, which is nice. I'm assuming that their losses are stemming from higher expense. Inflation is probably killing these guys as far as their semiconductor materials and their flexible materials. I know these guys are working on like bendable transparent materials, the flexible materials that go into Samsung phone screens. Their expenses have probably been skyrocketing between oil, inflation of semiconductor materials, and all that stuff. I see that it's up today, but it looks like it's a very short lived relief rally. I'm more focused on the financials here because the forecast for the company, like long term, I think that this could be a good play, especially if they establish like an exclusive partnership with a cell phone manufacturer, smartphones. Like Apple, Samsung, or Google would be huge. But they're not the only ones in their market anymore. There's plenty of other companies that are doing this. I don't know what's wrong with my screen. For whatever reason, whenever I'm streaming, the my trading view just goes. It does this thing where it just turns pixelated as hell, and when I mouse over it, it clears it up. But until I mouse over it, like it turns into a pixelated mess, and it makes me just want to barf. I don't have this problem any other time except when I'm streaming. And I have a good graphics card in this computer. Like, I don't know why this is happening. I think this is because I upgraded to Windows 11. I regret that mistake so much. I hate Windows 11 so much. I liked it at first for the aesthetic, but man, the performance is just so terrible. Anyway, looking at their earnings and their sales ratios, I see their sales ratios are in decline ever since Q3 of 2021. So their cash flow is not improving very much either. Jeez. I have to keep clicking this just to be able to see what I'm looking at. All right, well, looking at metamaterials on the 5-minute, I can see that we've got some bullish divergence on the RSI recently. It is making higher lows. It's about ready to put in another low, and you have a crossover pending on the price cloud oscillator. I use this as opposed to a MACD now because it provides some price clouds, and you're right in the take profit zone for a short position. And it looks this is a MACD, by the way, in the middle of it. It's just got a little bit of extra indication for when the momentum is shifting into your favor. But if there's a crossover here, then you could see this move up again. This 83-cent price target looks pretty attractive for a short-term play. This is based on this harmonic pattern here. This is a cipher pattern that printed in pre-market. I'm looking over at live stream chat, seeing all the people posting huge wins off of SPXU and UPro plays. Wow. Congratulations, General Disarray, on the 100% profit. Let's see. This was SPY put for $356, expiring this Friday. Bought the contract for $274 and sold it for $5.55 per share. That's a solid gain, dude. 1,100% take on a $500 initial investment. That's nice. Congratulations. Can I take a look at Excella? Wait. Oh, chat's getting away from me. Do I think that SPY will go lower? Yes, I do. I think that it's going to probably keep heading lower throughout the rest of October, according to seasonality and as a result of CPI running hot. The market does not like what CPI is doing right now. And we're trading in a channel that dictates we're on target to hit 340 by the end of the month. So this is my target right here. If we just keep trading in this channel, then we're perfectly on target to hit all of my take profits before the end of October. Until I see this channel break, I have no reason to exit my short positions. Okay, what is the expected CPI? Core is expected to be, let me double check my economic calendar. Core is expected to be 6.5% by the Fed. Last month it was 6.3%. Forecast consensus by the market is 6.4%. So if you see a 6.5% or higher print, then expect the market to move down. And that will be coming 1 hour before market open on Thursday. Retail will be flat this holiday and destroy Q4 earnings. I think the Q3 earnings are already going to be terrible. Like, I'm ready to start shorting all of the major tech companies based on their Q3 earnings dates, especially Tesla. But it looks like Tesla is already printed most of its price action has already shown me that Tesla's priced in a poor earnings. And this, I called this out. I called out that Tesla was going to perform extremely badly leading into its Q3 earnings. And like I said that 2 weeks ago, and you look on this 1 hour chart, September 21st was the last high it had. It's down 30%. Like, that's a huge take. I know that Tesla's expensive, but like there's other alternatives. Like you can go long on Tesla Q, which is a short inverse ETF against Tesla. So that would have been just fine. Or you could have gone short on TSLL, which is Tesla long. Any of those would have been just fine, and you could make a seriously fantastic profit. I'm sorry, Persephone. I keep hearing about your selling your Tesla puts too early. You're not dumb. We have all made that mistake selling too early. It has happened to the best of us. Is BIOR going to have to reverse split? Not for another 6 months. They have 180 days from now till until a reverse split is required. Will they need to reverse split? Maybe. For me, it doesn't matter so much. If they do end up reverse splitting and their share price goes down, I'll just wait it out and sell covered calls until um, until a time when I can accumulate even more shares. For me, Biora is a retirement hold because it's one of those few emerging growth companies that I see um, as like a very early Dexcom, you know. And if you look at Dexcom's history, Dexcom was trading at 60 cents at one point. It was so low. The value of Dexcom was so depleted because of just like lack of funding and because they were a newcomer to the space in the industry they were serving. And then they eventually created a product and got it to market. As soon as it got to market, they shot up to like $15 per share. It only took them 1 year to recover everything they lost and shoot way past it. And Biora can do the same thing. They have a novel technology. There's no other pill that does what theirs does. It's completely novel technology that's bound to revolutionize internal medicine, especially in the gastro and GI sector. It's applicable to other areas of medicine too. So once they get the ball rolling, and they get like real good money flow coming in, Biora will do fine. They just have to survive this initial onslaught from shorts beating the living hell out of them. Okay, I will take a look at Excella really quickly. I saw the move as a result of their announcement of the merger, which that sounds really cool. Um, Honestly, I'm a little bit jaded about Excella. I'm holding on to. I think I'm holding on to like a couple of contracts for 2024 or something. But the Parchata is a douche. The dude's an asshole. I really do detest the man for what he did. If he sells this company to someone else and they seize control and kick him off the board, great. I'll stick with Excella. I'll be I'll be long on the XBP partners or whatever the hell it is. But Parchata is as long as he has any voting control over this company, I'm not adding to any positions. But the merger news is very positive. The RSI is putting in higher lows as well as the share price is still in decline after this big move to the upside. So that does tell me that there's accumulation happening here. So there is somebody that's buying up stock while the price is in this downward trend since it had the big move the other day. Okay. Hey, Winter, how's it going? Hope you're doing okay. Day night. What do I think of GME holding up well compared to other stocks in this poop market? Um, GameStop is kind of just it is kind of holding its own, um, but I do see this bear flag descending triangle on it. I've been kind of worried about GameStop making another move to the downside and retesting these lows again between now and the holidays. I think that if GameStop can get to the holidays and it can hold up support here until then, that it could perform well going into December and maybe January. They're This is the right season for them because you have major game releases happening all throughout this season. Christmas is like this is the quarter for game sales. All the gaming companies are doing all their major competitive releases, and GameStop is going to be doing all kinds of events for sales and marketing campaigns. And their switch over to becoming an e-retailer will be a big benefit to them because it'll reduce a lot of their costs and expenses. I think that that would be very good for them. But if they break this low, then I think they're probably going to end up breaking down with the rest of the market to around $20 again and retesting this low before the holidays. And then once we get towards Thanksgiving, then GameStop can make another move. It'll probably have to test this moving average. You see all these moving averages converging right here. This is quite bearish actually for the stock. This is not positive. So as far as technicals go, GameStop is looking very bad, but in terms of its fundamentals and its earnings season coming up for Q1, that is very positive to look forward to. So if you're willing to hold a position in GameStop throughout that, there may be some opportunities to average down on positions, get something for a discount, and then ride it to the upside going into their Q4 and Q1 earnings. So we'll see how that goes. Flinster asks, "Hey TD, do you think the CPI will have more of an impact on Thursday than PPI tomorrow?" Most likely, but PPI is going to give a lot of the institutions a lead on what the CPI is going to do. Because PPI is, I want to make sure that I'm getting my acronyms correct, but I'm pretty sure that PPI is the producer's price index. Yeah, producer price index. So this is the average change of costs in sales prices for domestic producers versus output costs. So this is going to give a good hint to what core inflation will be the next day, because producer price index will kind of catalog what the main producers have had to raise their prices to in order to keep up with their manufacturing costs. And that has a direct correlation with core inflation. Let's see. Dixie's ripping and oil is sinking. Yeah, I was worried about the oil market actually. I'm still so mad at myself. Exxon did exactly what the hell I said it was going to do. I said it was going to rip from this low as it bounced off of its moving average, and it was going to head to $100, and it more than exceeded my take profit, and I didn't take the trade. I didn't get in because I forgot about it. No other reason than I just forgot. I feel like such a dumbass. Like, I can't believe I forgot this. This was my big trade that I was waiting for, and I was just going to like throw $500 at ExxonMobil, and it would have netted me thousands in profit. It would have been a huge win, and I'm just so pissed at myself because this was what I was waiting for. I was like, yes, oil has hit the bottom, and we're going to start bidding up oil prices. OPEC's going to reduce supply, cut it in half. They literally cut oil supply almost in half. It was like 35% drop in oil supply, and it just sent oil ripping. And I was like, by the time I even realized it, Exxon was already at like $95. So stupid. Yeah, I hear you, Dwix. The Excella is it's so unpredictable now because the chairman of its board is such a the dude's a crooked asshole. He literally used me as a vehicle to pump his own stock, and then he used that to get a reverse split in at the best price on the backs of retailers. And I'm so pissed at that because he didn't even communicate anything with me. He didn't say anything. All he did was like he just took notice that my video happened to be the most popular one talking about his stock. So he used that and then did like this. He bought up like 666,666 shares of stock. It's like a clear signal. Like there's no reason to take that specific number and go and buy those shares. He did that just to like throw out a signal, just to get people excited because they were watching my videos. And then he dumps the stock and throws down a reverse split. Like it was so like it's the most underhanded fucking thing I have ever seen a CEO do, and I know he did that on purpose, and he did it just to take money from retail in order to get his stock back up to Nasdaq listing requirements. But he didn't have to. He had no reason to do that. He could have filed an extension and gotten an extra 180 days to get his stock within compliance. And he had plenty of other good news to put out to the market. There was no reason for it. And it did nothing but just pissed off a whole bunch of people. And then everybody assumes that I'm talking with insiders and that I knew the whole time, which is bullshit. I never knew a thing. I got rug pulled just as badly. All of my positions are worthless. So literally, Parchata can go and sit, like, he can shove a whole fucking saguaro cactus up his ass. That dude is an asshole. If I ever see that dude open up another business anywhere, I will be shorting the living shit out of it. That dude does nothing but steal from people. Yes, I'm sorry. We are talking about Excella, and I'm very angry at Parchata. Unless that guy gets fired and all of his shares are surrendered, I don't want anything to do with the company. I really don't. I still have a position, but I still have a position in Excella, but it's worthless. Like it's literally worthless. I have a position because I can't get rid of it. So, take that for what it is. If you have the opportunity to get out of Excella now, I would. I would just exit. There's no reason to hold it. It's encouraging that they're getting a reverse, that they're merging with another company. Like that is very positive. But Parchata is the guy's a thief. The guy is a thief, and I should have listened to the community when they warned me that this guy was a crook. But I didn't. Against my better judgment, I did not listen, and I should have. It was absolutely a mistake. So I'm out of the only I'm out of the only thing that I can sell on Excella, just because it's the only thing that I can physically get rid of. But none of my other positions, like none of them are worth selling. There's nothing that I can actually get rid of. They're all just like really distant call options that was like pre-split. So I literally took Excella off of my Discord because people kept talking about it, um, just like begging for something positive to say, and there's just nothing positive to say about it. The company itself has a great business model, but their problem is Parchata, and unless that guy gets fired, there's no positive thing that will ever happen to that company. I could also say the same for Mickery, actually. Yes, you bring up a good point. Like Mullen, and I'm not gonna bag on anybody else's play. Excella was my play, so I'll bag on it all the hell I want to. But Mullen is no longer my play. I'm not in that anymore, and there's plenty of other people that are still betting on it. That's up to them. But Mickery, he's the reason why I'm staying away from that stock too. That's just that's how I'm choosing to manage my risk. Like I'm not really playing meme plays anymore. It's like I'm staying away from them for the most part because there's too many bad actors in executive positions that are just stealing from people. And I'm not interested in watching people lose their life savings to a bunch of crooked businessmen. I don't want to see that happen. I want to help you make money. I want to see people succeeding. And the only thing that has happened since Excella and Mullen is people just got rug pulled over and over again, and they got sold a bunch of empty promises, and they had their fucking money taken away from them. All from these lying CEOs and executive board members. These dudes are ruthless. They don't give a shit about your money. Like, you think that David Mickery gives a shit about you and what you do for a living? You think he cares how hard you work for your money? He doesn't give a fuck. He doesn't care about you. There's so few of these dudes that give like they give less than a shit about you. You could say that I'm like cynical and jaded, but like it's the way it is, man. There are these bad actors get into their positions through dubious means, and they do it to make money for themselves. They're not interested in making other people rich. They're there to make themselves rich, and that's why we play the stock market. We're trying to make ourselves wealthy. We're trying to achieve financial independence. And it doesn't you in the stock market, you are fighting to take money from other people. Yeah. You nailed it, Blades. Like, the psychopaths tend to win because they're ruthless and they don't care. That's why they rise to the top. That's why you see so many sociopaths and psychopaths in executive positions. There's literally a study done on this, and there are more psychopaths in executive positions acting as CEOs statistically than there are non psychopaths. People with this dissociative personality that places people as like beneath them is required to be successful in this industry as a businessman, more or less. It's not universally true, but there are more cases, there are more examples of extremely morally bankrupt people in positions of power than there are people who are actually morally just in those same positions. How about BBIG? Were the bad actors kicked out? Yes, that I can firmly say is BBIG is one of the few exceptions solely because of the involvement of Eric Finman. I love that guy. Eric Finman is he's a good dude. He is somebody who actually practices what he preaches about actually making positive changes in the world. And maybe he like goes on to like do more like some of his things are gimmicky, like beaming down NFTs to Africa, but it still had a positive effect on the world. And he did it using a project that was, important to him and what was cool. And he actually did something with it. So he actually practices what he preaches. And I absolutely applaud him for the things that he does. Like he actually, when he says he's going to do something, he goes out and does it. I hope he definitely is staying with the Zash team. But anyway, BBIG, um, BBIG is looking like it's in much better shape with all the bad actors gone. The share price is still not where we need it to be, but if I stretch out this chart just a little bit, we have broken our ascending wedge no matter how I draw it. So no matter how I extend and redraw this ascending wedge, we have broken it. I suppose I could go way out to this, but that was literally just a volatility spike, and I don't include it because it's an outlier move. This wouldn't have happened without the T12 unhalt. So we have broken this descending wedge. The other thing that I saw on BBIG was a very large, unusual options trade. Somebody bought 7,000 call options for the $1.50 strike for April of 2023. So somebody is betting that by April 2023, that's way out here, they spent $250,000 on this options contract. That was a massive bet, at least for a stock like this, because this would be considered an extremely risky bet. But those options are expiring here in late April. So somebody's got this one. Someone's got this bet laid out, and this is when it's expiring, right here at the end of April. It's actually 1 day off. There we go. So this is worth $250,000. Like $250,000 is riding on this options bet of BBIG crossing this threshold of $1.50 by that point. And the cost average of this actually requires for them to be in profit for the price to actually go to $1.70 before that date. So this is, it's not quite a leap contract. It doesn't meet all of the qualifications, but it's pretty close. It's 9 months till, or I'm sorry, 6 months till expiration. So it's a sizable bet. Very, very worth taking note of. There was another one that was made alongside it at the same time for like the $5 strike, but it was like they spent like $5,000 on it. So for them, I assume that is small potatoes. It was a much, much smaller bet. But in any case, there was huge options activity in BBIG, and these options being so close to the money, at least relative to where it's been trading for the last, 4 months, this is actually quite attainable. And it's just below the 200 period moving average, which is dropping a little bit more every single day while we're trading in this range below $1. The thing is that I know that this is betting on merger. That is why this date was chosen. This is a bet for the merger. And I'm confident that the merger will take place well before April. BBIG, I think that if they are paying attention to what the market is doing, that that the most opportune time will probably be around Thanksgiving or ahead of Christmas, because by that time the market will be more risk on, will be in a seasonal bullish period, and that is the opportunity when the market can actually see BBIG find some support above this level and go on a run. But now we've broken this descending wedge, so the technicals are in the favor of this being a bullish move. What we need is volume. The volume here is way too low. We need to see volume ramping up, similar to how we saw at the end of this move back in August of 2021. There was a huge drop in volume, and then we had a surge that took us outside of a descending wedge, very similar to this one, although this one was only the span of about little bit less than 3 months. This one's been going on for almost a year. So we're going on to our, we're on 270 days. So nearly a year of this wedge we've been trading in, and we've finally broken it. So this is quite a positive development for this particular stock. So I'll be keeping an eye on BBIG. Don't worry. I got alerts set on my moving averages, and we had one bust just the other day when we crossed the daily. We did close above the daily 50, just barely, and now we're about to close above the daily 50 again. So all of these, all this consolidation of the 9, 20, and 50 period moving averages, that's the white, blue, and green moving average lines that you see here on the screen. This convergence is very bullish. And you can see on the PPO indicator that we are putting in higher lows. So I think we'll put in one more higher low before we start to see BBIG taking off. But we are in the right. We are moving in the right direction. We are finally getting that push, and we're starting to see a lot of wicks on the bottom as we're pushing higher. All very good signs. We've even entered into a bit of a bull channel, as a matter of fact. I just noticed this just now. If you draw a channel along these wicks, you can see that BBIG is starting the early makings of a bull channel. So, all moving in the right direction. Yeah, retail does have a good board that's interested in the success of the company now. The board of directors, I've not spoken directly with them, but the consensus from people I know who have spoken to them, the consensus is that they're very excited and motivated to see the company succeed. Ross Miller, the new CEO, who was appointed formerly by the court, who's now taken the position voluntarily on a more permanent basis, he is very excited to see this company succeed, and he's very grateful for the opportunity. So we have quite a lot to look forward to from BBIG. I think it'll just take some time. We got to wait for the merger to get kicked off. All of that needs to go through its own process. We have to be patient with that because that just naturally takes time. It's a big legal kerfuffle. There's a lot to do in order to get a company like this to merge between BBIG and Zash. But once that happens, the valuation data starts coming out. That's when you'll start to see the momentum come back to BBIG. These are excellent prices to get in early. We'll probably still see some oscillation for a little while, but like a return back to like the 70s, I don't see in our near future. Ishmael, I can look at Cano. I don't know anything about the company, but I've only got 8 minutes left. So this is the last ticker request that I'm going to do for today. And then we're going to watch the SPY close. And I have to go. I unfortunately need to go promptly at the close of the market. Okay. So if you're in this one, I think this is probably where you need to start thinking about taking profit, actually. It was a good run, but this one, the technicals look like they're turning around. You've got a couple of things going on. So you have a low here, and you're doing a parabolic step pattern. And now if you break a lower low, I'm sorry. Yeah, if this high breaks, if you close below this line, then this is going to start coming down fast. So you need to start thinking about taking profits. These parabolic arc moves, they run quickly and then they crash even faster. Potential buyout news? Okay. Well, that could explain the move. But you need to watch these lows. Every time you see one of these lows happening, you need to set up a floor. And if you see a candle close below that floor, you need to get out. So be ready to exit when you see that technical pattern break. So as long as it keeps setting up higher lows and it keeps moving in this parabolic fashion, if you keep seeing the floor lifting higher, that's good. But you need to look for an exit. The positive end, the bullish scenario, is this forms a giant cup and handle and it breaks the high, and then it goes on an even larger run and it'll move the length of the handle or even potentially the length of the cup. But if you break and close below this level, where you break like if it gets up to this point, you've got consolidation in this area. If you close below this, you need to get out right away. Don't hold the position when it starts moving back down, and keep a close eye on the RSI for bearish divergence. If you see multiple bearish divergences, you see the MACD crossing over, you see volume dropping as the price is rising, all of those are signs that it's time to get out. So look closely for exits when that starts happening. Okay. That'll give you the best opportunity to profit from the move and get your best exit. Let's see. Cano Health Services, small float, large market cap. I like the price. Earnings, it's mixed. Could be better. Their income statement is break even, I would say. It's a little negative, actually. The technicals look good, but this could just be like a very temporary move. I don't know any of the fundamentals on the company. I don't know what they do. I don't know what their sector is like, but just be really careful. As long as it's moving in your favor, you're golden. As soon as it breaks a level of support, you got to get out. Take your profit when it's in front of you. Don't wait on it. Okay? And as a matter of fact, be really careful of this candle right here. Like this candle close, if you're in call options right now that are expiring this week, you may even want to think about getting out of those right now and not worry about after hours, because there could be a rug pull in after hours. So think really carefully. You got market close coming up on you fast. Okay? All right. SPY is double bottoming. Interesting. So I think that I will take that as the cue to get out of my short-term dated positions for the SPY. Anything that I'm day trading for this week, I'll be getting out of. It might keep going after hours. That's always possible. But for me, it's not worth the risk to hold on to anything that going into the PPI print, just because it might, the position might reverse on me. And I want to take the profit that is in front of me while it's there. I've got longer dated contracts that could go until that can go until much further out. Anything that I'm holding on to for like November or late October, I'll just be holding on to those, averaging down on them where I can. But at the moment, I see bullish divergence here on the RSI. This one is actually looking like a double bottom, and it did print a lower low. So this is actually going to close with a bullish divergence on the RSI. And I think that the market might start ripping tomorrow. So we might get something a little bit crazy happening in after hours. So if you got anything that if you've got anything like expiring tomorrow, like if you got SPY puts expiring tomorrow, then you might want to think about getting out of those. You got 52 seconds left in the market to make your decisions. You got volume coming in at the end of the day, and you have a bullish RSI divergence forming right here. So this is a technical signal for a gap up tomorrow. We had a big rug pull today that brought us back down to our intraday lows. But this is a double bottom pattern. This is a bullish pattern. 10 seconds in the market. 10 seconds. PPO is rejecting off of its slow. Higher low on the RSI. Testing its moving average. It's an indecisive moment. And that's the market. Okay, guys. I have to bail right away, and I'm sorry that I can't stay to spend some time after hours answering any questions right now. But I will try to make a point to come back tomorrow and update everybody. I'll see if I can get a video out tonight as well to provide some insight into what PPI and CPI are expected to be for the rest of the week. That's my time. My meeting started. I gotta go. I look forward to seeing you guys next time. Have a hell of a time in the markets.